This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The Biden administration is weighing cutting U.S. imports of Russian oil and ways to minimize the impact on global supplies and consumers, the White House said on Friday, as lawmakers fast-track a bill that would ban Russian energy imports entirely. We are looking at ways to reduce the import of Russian oil while also making sure that we are maintaining the global supply needs out there, White House spokeswoman Jen Psaki told reporters at a briefing. The White House remains in contact with U.S. lawmakers over the issue, she said. U.S. Senators Joe Manchin, a West Virginia Democrat, and Lisa Murkowski, an Alaska Republican, on Thursday proposed bipartisan legislation to ban Russian energy imports in response to the invasion of Ukraine, calling it a counter to Russia weaponizing energy.
A deal to limit Iran's nuclear program would lead to sanctions on its oil sector being lifted, but it could take several months for any more Iranian crude to flow, and even then it may only offer short-term respite to tight oil markets, analysts said. Oil soared this week to almost $120 a barrel for the first time in a decade as the West slapped sanctions on Russia over Ukraine, before hopes that a deal with Iran could be announced within days knocked crude from its highs. The nuclear talks appeared to near a climax on Friday with talk of an imminent ministerial meeting.
Moving on to the top news in the energy sector.
Britain will look to target Russia's energy sector in future rounds of sanctions, a move the government has so far resisted amid warnings this could push up energy bills with oil and gas prices already at multi-year highs. Since Russia's invasion of Ukraine last week, Britain has imposed a ban on Russia selling debt in its capital markets and targeted several Russian banks with sanctions, as well as companies like defense firm Rostec and airline Aeroflot. We've been very coordinated on sanctions, we've shown huge unity. It's having a big effect in Russia, but we now need to do more, Liz Truss, Britain's foreign minister, said during a visit to Brussels for a meeting of NATO members.
India will raise petrol and diesel prices next week for the first time in more than 4 months as global crude prices soar after Russia's invasion of Ukraine last week, 3 government officials said, amid growing concern about inflation. Asia's third-largest economy, which imports 80% of its oil needs, faces retail inflation staying above the central bank's tolerance limit of 6% as companies pass on a nearly 40% rise in crude prices since November, as well as rises in prices for other imported raw materials, economists said. State-run oil companies, which control the domestic market, have not raised prices since November 4, aiming to help Prime Minister Narendra Modi's Bharatiya Janata Party in crucial state assembly elections including in the most populous state of Uttar Pradesh.
Next, we have the top news in metal markets.
The London Metal Exchange, LME, on Friday raised its margin requirements for aluminium and nickel contracts effective at close of business on March 8 after a rally fueled by the escalating Russia-Ukraine conflict. Russia is one of the world's biggest exporters of key raw materials such as aluminium and nickel traded on the LME. The possible exclusion of supplies from the country due to sanctions has sent traders and importers into a frenzy. The exchange raised margin requirements for aluminium contracts by 10% to $242 per ton, while hiking margin requirements for nickel contracts by 12.5% to $2,250 a ton.
Rising domestic gold prices put off buyers in top Asian hubs while others waited on the sidelines with a close eye on the Russia-Ukraine conflict, while Hong Kong's COVID-19 curbs further dampened appetite. Spot gold prices have risen about 3% this week as the war in Ukraine encouraged financial investors to buy bullion as a hedge. The higher prices put off buyers of physical metal. In China, gold was selling in a range of a $2 discount and a 80-cent premium to spot prices. That compares to premiums of $2 to $6 over spot prices last week. We will now look at the top news in the agricultural sector. World food prices hit a record high in February, led by a surge in vegetable oils and dairy products, to post a 20.7% increase year-on-year, the UN Food Agency said on Friday. The Food and Agriculture Organization's FAO Food Price Index, which tracks the most globally traded food commodities, averaged 140.7 points last month against a downwardly revised 135.4 in January. That figure was previously given as 135.7. Higher food prices have contributed to a broader surge in inflation as economies recover from the coronavirus crisis, and the FAO has warned that the higher costs are putting poorer populations at risk in countries reliant on imports.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.